If you've been following this channel, you know that my wife and I are debt-free except for the house, which means we've gone through that journey of scrimping, of saving, of beans and rice, rice and beans, scorched earth living. We climbed out of the holes of student loan debts, of car debts, of consumer debt. We built up an emergency fund. We built up a down payment. We purchased a house. We arrived at the coup de grace, the nirvana, the summit of being debt-free. Is it, though, the summit? Is it the coup de grace? Today I want to talk about really two regrets we've had in becoming debt-free. Things we wish we would have known as we were on the journey, climbing out of the hole and climbing up the mountain. That makes all the difference once you're finally at the top. I'm Garrett Weldon, and this is my channel where we talk about personal finance and business. Regret number one is watch out how many of your credit cards you cut up. I know that's the advice. I canceled cards. I got rid of cards, all except for one. And it would have been such a big regret if I wouldn't have kept that one credit card. Now, I know for many, as you're climbing out of debt, is more of something that can create damage or a knife that can cut on both edges and it's just not worth keeping. And if that's the case, cut it up, get rid of it, close the account. If that is truly the piece of the financial journey that is keeping you in the hole of debt, the hole of consumerism, get rid of it. But if you have even the slightest control over how you utilize credit cards, over how you view the use of a credit card, there's a strong consideration to at least keep one of them open. I know a FICO score is often represented as a I love debt score. And I can see that. I can see that perspective. But another way to look at a FICO score is your responsibility with other people's money, your responsibility in being a tenant of a house that you don't own. Let me explain. So when you take money, a bolus of money, and you deposit it into the bank owes you interest, although not a lot, clearly not a lot if it's in a savings or a money market account, but they owe you interest. They owe you a monthly payment. And if you think of that, in what position are you, let's take, for example, renting a house, when you're the one that owes a monthly payment? It's when you're the tenant. It's when you are the rentee. It's when you are living in a rental buying from a landlord. That's when you owe somebody else money. So from a bank's perspective, every time you deposit money into one of their accounts, they are responsible to pay you on a monthly basis. To pay you on a monthly basis. Said another way, they are now the rentee. They are the tenant of your money and they owe you for it. When you flip that around and you take money from the bank via a loan, you owe them money. You owe them a monthly payment. Said another way, in this position, you're the tenant, you're the rentee. So a FICO score is a way to demonstrate how strong of a tenant you are. It is a letter of recommendation to other banks, to other institutions that gives them a quick look into your past experience as a tenant. When you go and rent a house, do you need to put down recommendations or references, people they can call? Yes, because they need to hear from other people that have had experience with you how you are when acting as a tenant, when acting as a rentee. A FICO score is the same thing. And one of the easiest things to do, since 15% of your FICO score, 15% of your FICO score is determined by length, and that means the average amount of time different credit lines have been open. They can take your oldest credit account and your newest credit account and all the ones in between and average them. So I was at the point of taking my oldest credit card and cutting it up. And I did, but I chose not to close the account. Fast forward years where my wife and I are now in the situation that we find ourselves. And just that one decision of not closing down that account, it has now been open for over 12 years, is a pivotal piece in me being able to have an 800 plus credit score. Why? Because we got a mortgage. And when you get a mortgage, that's an account that goes onto your FICO score. And we now have only had our mortgage for 1 year and 2 months. So that's our newest account. And when you combine that with my oldest account of over 12 years, together we have an average that is approaching 7 years. This is huge. So one of the things I wish I would have known, one of the things that would have been important as I was climbing out of the debt hole, was an understanding of what credit was. That it's not just an I love debt score, but it is a representation of how strong of a tenant you are when you're using other people's resources and other people's money, and how easy it was to just keep one card open. And item number 2. This one is more philosophical. But have you ever been on any type of journey, whether it's a road trip or climbing a mountain? I mean, that might be the best analogy to work with in what we're talking about. But when you get to the top or you get to the destination and you kind of look around and you think to yourself, is this it? This is what we were climbing for? This is what we were hiking for? This is the road journey that we were on? And there's almost a sense of letdown when you get to the top, because that's it. And you realize the summit, the end point, is just a destination. And what was really enjoyable is the journey to get there. The journey of getting there, the climb, the step, the ups, the downs. That's what made it meaningful. And what I found in our debt-free journey is when you get to the top, or said another way, in Dave Ramsey's baby steps, once you're really through the debt snowball, once you have an emergency fund and you've bought a house and you've put 20% down on that, the next steps are boring. They're really boring. And there's a lack of creativity in them when you're just supposed to put money aside into a mutual fund and continue to put your head down and grind it at work. What I found as we got to the top and we were getting out of our debt-free journey is a big, big desire to create things for our family, to create things for our community, to create things for our world that could benefit not just me and my family, but my community, my state, my nation, the world. And there's a limited ability to do this, I found, in W-2 employment. Once I got to the top of the debt-free mountain, I found that other people that were on this journey, following the similar path that I was on, also lacked creativity. There was this big, big feel that now we've made it and you just have to stick it out at your W-2 employment. You have to stick it out and work until you are 62, 65, whatever it may be, retire, and you'll have your nest egg set aside in different retirement vehicles and retirement accounts that you can now use to travel and live the world. But what happens in between? What happens from the time that you get to the debt-free summit, to nirvana, and retirement? And there was a longing, there was a pull, there was a realization that I was my strongest asset and that I wanted to create. Whether that is getting involved in things that are outside of W-2 employment, whether that was service or philanthropy within my area, I wanted to create. And W-2 employment often has too rigid of boundaries to allow creativity and exploration and entrepreneurship and trying and failing and trying again. When I got to the top of the mountain, I wanted deeply to be involved in things that were outside of W-2 employment, that allowed me the ability to create, that allowed me the ability to give, and that was a shock. Because the whole time you were climbing out of debt, you kept thinking to yourself, as soon as I'm through this phase, it's that. I've made it. And when you get there, you realize it's a little lonely, and that some of the joys of life are creating things with other people, creating business, creating opportunities, creating service. And I'm not saying that you can't do that or that you'll struggle with the same thing that I have and that we have. I'm just saying it's a regret that I wish I would have known beforehand and that other people would have helped me see and understand what it's like to be on top of the debt-free mountain. So there you have it. There's my 2 regrets in becoming debt-free. Number 1, don't cut up all of your credit cards. Keep at least one open. It does impact your credit score, and your credit score is not just an I love debt score. And then number 2, a strong recognition that once you fill up the hole of debt and you're on top of the debt-free mountain, you may have a strong desire to start creating, to doing things you once weren't interested in. If this has been helpful, I've picked out a couple more videos for you to watch here on my channel. And please consider subscribing and continue with me and us on this journey. I've also put down in the links below a few things that might be beneficial. The first is my Budget Made Easy tool, and the second is my house hacking worksheet.